Gold is now up over 27% since the outlier buy signal came through. Have you been profiting with it? I don't know, but I do know one thing. A lot of people are asking the question, is it too overbought right now? Is it time to get out of the way in gold? Let's take a look at GLD and let's see if it's time to get out. Then we're going to answer all kinds of other questions here on Ask Me Anything Friday. So first, we got that buy signal back on August 26th right here. You can see the 10 went over the 20, price went over the 50, buy signal came through and just rocket ships higher, rocket ships higher. Now, without looking at any macroeconomic news here, this is what you want to see on any stock out there, any time frame out there. If you're trading the 1 minute chart, the 1 week chart, the daily chart, doesn't matter. When you have the 10 over 20, price over 50, this is a potential that can happen. Not every time when they cross over, it happens. But every time this happens, the outlier trend template lights up, 10 over 20, price over 50, right? And I want to preface that and say, not every time does that happen like that, right? A couple times back here when it didn't happen like that. But when it does run like this, it will be crossed over. So be ready to take those opportunities, right? So now looking at this, the buy signal came on August 26th, and obviously it's been running like crazy. We're now entering a peak greed up here. We're at 95 out of 100 on the greed scale, 95 out of 100. So where's the point to exit? So I'll give you a couple ideas. Now, granted, I'm not trading this, so it's not part of my trading plan, but I'll give you a couple ideas. One, a close under the 10 EMA could be a good time to get out. Could be, right? You can see right here how far it's run without closing under the 10 EMA even once. But keep in mind, you're not going to get out at the very top. So just let that be not on your radar ever again. Okay, you will not catch the top, period, full stop. If you got out at the 10 EMA, that'd only be a 5% pullback from the all-time highs right there to get out at that point. You're still capturing a huge buttload of gains, right? Or waiting for the outlier sell signal to come through. We have found through our back-tested data that that is actually one of the best ways to get out with as much profit as possible. It's just waiting for the sell signal to come through. So give you a couple of different ideas. Of course, you need to take that into your account in your trading plan. And honestly, you probably should have known exactly where you're going to get out before you got into the stock, got into gold. But right now, man, gold's running, right? Let your winners run as far as they possibly can. And then once they start to misbehave, that's when it's time to get out, right? So like I say all the time, all stocks are bad and every once in a while they act right. Gold definitely is bad, but every once in a while it's acting right, and it's acting hella right now. Justin, that's a great question. I know you roll to take profits off the table. Do you try to roll up the delta to keep the leverage on the existing trade or keep the value closer to 1? All right, so this is deep options theory right here. One of the things that we talk about in let's go to AMD. One of the things that we talk about in our trading room is being is straight up voodoo, straight up a ninja hack. When you roll an option, that means you've already purchased the option, right? Let's say, for example, I don't know why my deltas aren't loading. There we go. Let's say, for example, that you purchased the well, let's go a little deeper. Let's say you purchased the 197.50s on AMD, right? Let's say you purchased it when it was around 80 delta. That's my wheelhouse. Now it's gone up to the 90 delta, give or take, right? You can now roll down from the 197.50 to maybe back to the 80 delta, the 210. When you do, you'll take in a credit of like $10, right? Now, I don't know what initially it would have cost. Let's say it cost you $20 initially. Now, when you roll it, you can take $10 in credit right there, which means you've taken half of the risk off the table. Half the risk off the table. Then you can go trade with that $10 because those are partial profits that you've already taken out of the trade. Cool, right? Super cool. Rolling is one of the most ninja hacks I've ever come across. If you have rolled, type #ninja in the chat because you know exactly how cool this is. So it allows you to keep the trade on, reduce your risk, take partial profits, and frees up capital to trade with trade on other stocks. Now the question was, do you try to roll up the delta to keep the leverage on the existing trade or keep it closer to 1? So what I wanted to do, deep options theory right here, is talk about the deltas. So let's say we started at 80 and now it's gone up to 90, give or take, right? Options go up what's called an asymptotic curve, right? So it starts at 0, goes to 100, all right? Starts at 0, goes to 100. The closer you get to 100, the less gamma there is between each one of these. You can see right here, this moves 1. Actually, let's start at the bottom here. This moves 3, 3, 3, 3, 3, 3, 3, 2, 2, 3, 2, 2, 1, 2, 1, 1, less than 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 1, right? The closer we get to 100, the more it has to flatten out, okay? So the delta is the change in the options price for every $1 move in the underlying stock. So by rolling, instead of it getting closer to 100, right, we're actually resetting our position back from 90 to 80 in this case. It won't be perfectly that, and it doesn't have to be perfectly that. The goal here is to keep the trade alive. Now, as it goes deeper in the money, this one's only going to rise by a gamma factor of 1 or 2. This one's going to rise by a gamma factor of potentially twice as much, right? So this is gamma is measuring your acceleration, while delta is measuring your speed. So your acceleration is going to go up faster here than it is over here. In theory, I don't know how much different it's going to make to your overall profits here, but you're going to be able to have less risk in the trade. You're going to have the capital to trade with right now, and you're going to have partial profits. Because basically, imagine that we're going between 90 and 80, right? And every time you roll it, you go from here to here, 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 right? And I know some of you guys in the chat have rolled gold multiple times. Share your story of rolling gold, since we just talked about gold in the chat. I would love to showcase you, because you have experienced what it's like to do this over and over and over. And I know a lot of you have got to the point where you have a completely risk-free trade from having rolled gold. I know Dr. J has been in gold for a hot minute and done really, really well. Lots of people talking about how they're straight up ninjas with their with their rolling. Super, super cool. Next swing of the market, I'll finally be a ninja. There we go. I like it. I like it. There you go. Senior Wahoo says gold risk-free by rolling with the Outlier Voodoo. Isn't this cool, right? Being able to put on a trade that has guaranteed profits. Dr. J has rolled it 9 times. Ozzy Ian has rolled it 8 times. Just continuing to keep the trade on and feed your account, reducing your risk all the way, yet you're still able to take advantage of that. So congratulations to you guys. That is awesome. Dasby has a great question. Does Batman wear shorts or pants or tights? He does not wear shorts. He definitely doesn't wear hockey pads. He so I have the world's greatest Batman costume for Halloween. I spent way too much money on this. I spent nearly $500 on this one, and it is like movie quality. It's gorgeous, and it has a jumpsuit that I had to get in and zip up from the back. Yeah, it's weird. I've never worn a jumpsuit in my life, but I can tell you for sure, not shorts, not shorts. Andrew, in my portfolio, I own a weekly paying dividend ETF. Its primary stock is Tesla, and Tesla is going to be going through a split. Will this ETF fund receive the same forward share split? I don't know. I really don't know. I would Google it. Unfortunately, I don't have an answer for you. Because it is a let me give you perspective here. When a stock has a split or reverse split, the options market will accordingly change as well. You'll see some really wonky options out there, right? Instead of $5 wide or $1 wide, you'll see $1.33, $1.67, things like that. It gets weird. I can only imagine that it will, but I cannot guarantee one way or another if it will or will not. Also, keep in mind, dividend paying ETFs, as great as they sound, normally over time have what's called volatility drag, I believe is the name for it, where they actually decrease in value. Look up covered call ETFs. They sound brilliant. They promise returns of 40% over a year, and yet the value, the asset value goes down significantly, even though you're earning that dividend. I consider it like having a rent house in a bad neighborhood, right? You're still receiving that rent, but the value of the asset's going down. That doesn't really help you here, right? So keep that in mind on dividend paying ETFs. Let's see. Great questions coming through here. How did you come up with a 50-cent spread? Is it a fixed number? Do you go with the higher for extrinsic value? Many gold stocks have 60 to 90-cent spreads. So the way that I would look at it is this, and we'll go to GLD to take a look. GLD. The market just opened, so things are going to go crazy, just so we're all clear. Looking deep in the money over here on GLD. And GLD has absolutely run, right? We're talking $25 for an in the money option at this point, around the 80 delta. So this one has a $2 wide spread. I'm not going to take it. I'm not going to take it. Here's why. Right? Here's why. Let's say that I bought the option for $25.25. And then I had to sell it back for $23.05. Right? That's a $2.20 loss just between buying and selling. Now, how much is that in percentage terms? That's a basically 9% loss. So you're going to lose 9% in your trade for the privilege. For the privilege of buying it and selling it, right? That's the spread that you have to cross. I'm not interested in that. I want to pay as little as possible. Even though these are super liquid, the bid and ask spread is huge. And I'm not willing to take a 9% haircut just to make the transaction. Then you can go to something, let's go to AMD, right? AMD is probably going to be less than that, around the 80 delta. Let's see. Here, that's about $1.45, which is still really high. It might tighten up here in a minute. It's getting tighter as we talk. Less than $1 now. Oh, and then it went up to $1.40, right? Keep in mind that in the first hour of the day, these are going to change wildly. These are going to change rapidly and wildly. And this is one of the reasons why I will never, ever put in a stop loss order based on the price of the option. Because you can see right there, the spread widened out huge. The cost is going all over the place, right? We don't want that. We don't want to get tripped out of a trade that would have been amazing just because the option prices got wonky at the beginning or at the close of the day. So MT, to answer your question, figure out what works best for you. Of course, more expensive options could have wider bid and ask spreads, but they don't have to. They don't have to. Can you explain what a short transaction looks like? Is it a put? So short is that's a long answer to a short question. Little play on words right there. Long answer to a short question. So to go long is to buy something, right? Let's say I went long Scrooge McDuck clocks, right? I went long Scrooge McDuck clocks because I now own this clock, right? I bought it. This clock I own, I bought. I went long Scrooge McDuck clocks. Now, if I wanted to go short Scrooge McDuck clocks, I would sell it. And I'm not going to get into the mechanics of short selling, but it's basically taking a position that you want the price to go down. Okay. Now, you can short a stock, you can go long a stock. You can short an option, you can go long an option. There's a lot of ways that you can go short. So like I say, it's a long answer to a short question. But at the end of the day, if you're trying to put yourself in a short position, you want the price to go down. If you want the price to go down, you could do that by selling calls. Like I said, long answer to a short question. You could do that by selling calls, which I would never recommend, but you could. Or you could be buying puts, or you could be short selling the stock, right? Any one of those three will get you a short position. So, Richard, it's a great question. Certainly one that deserves a lot longer explanation than that. Mighty Mouse says, wouldn't buying gold when the rest of the market is red be the time to get into it as long as the 10, 20, 50 lines up? By all means, right? If that is your plan, and you're going to hear me say this forever, I don't make predictions. I do not say gold's going to go to $5,000 a share. SoFi is going to go to $50 a share, right? I can't stand people on the internet who claim to have the future knowledge. SoFi is going to $100. In fact, I'm not going to pick on somebody, but I'm going to pick on somebody. Hold tight. We're going to go on YouTube and just find a channel called Stock Goat. Stock. Hang on. You're going to love this. Stock Goat. All right. So according to Stock Goat, SoFi, get in now. It's going to $100 a share over and over and over, right? Why would you not get into a stock that's going to go from $26 a share to $100 a share? I mean, like literally every one of these videos says, get in now, $100 a share. And he raised his price target from $75 a share, right? Nobody knows the future. Nobody knows the future. But all we can do is look at what we can see right now. So I know we're talking about gold, but we're going to switch over to SoFi for a moment. And we're going to say, Oh, you know what? Objectively speaking, this is in a sideways trend. Your 10 is under the 20, price is price is above the 50. Oh, 10 is not quite under the 20. Anyway, it's pretty close. Looking at this, we've got order blocks on either side. That's going to cause issues. The issues are that it's going to bounce and have some support here. It's going to bounce and have some resistance right here. Tell me order blocks don't work is you can visually see both of these candles getting both sided, right? It's like a ping pong match right here. At some point, it will be overwhelmed in one way or the other, and that will be the trend as it goes, right? And we can look at the trend right here, okay? The trend was a big, beautiful trend for a hot minute. And now, even though somebody can say, it's going to $100 a share, honestly, we don't know. We don't know. All we can do is have a plan to get in and a plan to get out. So back to gold here. If that is your plan to follow when the market's turning red and 10, 20, 50 on gold is lighting up, by all means, do it. By all means, do it. Build your plan. Don't try to predict the future. That's why I pulled his channel up. Don't try to predict the future. Just say, okay, looking at what I can see today, the data that's in front of me, the outlier buy and sell signals, the trends, right? What am I seeing as the prevailing trend on this stock? And sometimes it's easy, right? When you've got the market set up, when you've got the sector set up, and then you have the stock set up, it's pretty easy to see which way the prevailing wind is going. But when the market isn't cooperating, when the sector isn't cooperating, but your stock may be doing well, it's going to struggle. It's not going to have the incredible effortless moves that we're looking for. I want to trade effortlessly. Trading should be boring AF. Honestly, you put your money in like an ATM, like you put in your debit card and you pull out cash. That's what trading should feel like. If you're in a situation, and we'll go to SoFi again, where it doesn't feel very effortless, that means the market is not there for you, right? The market's just not cooperating. So if that's your plan on GLD, go for it. And again, I'm trying to get across having the personal agency, the personal autonomy to come up with your own plan rather than relying on random guys on the internet. Okay, come up with your own plan, execute that plan. Because at the end of the day, you need to be treating your account like a fund manager. Like myself, I am a fund manager. Okay, I manage 2 funds, soon to be 3 funds. I take this as serious as a heart attack, and you should as well. Don't be FOMOing into anything. Vin has a great question. What are the top 3 most important things in trading according to you? Number 1 most important thing is having a plan. Now, having a plan can be whatever you want. Okay. My plan is super detailed and I share it every single day for free on YouTube. Right. I know exactly where I'm going to get in. I know exactly what I need to see. And I know exactly where I'm going to get out. I know exactly how much I'm getting in with. And I don't have to stress at that point. Jocko Willenick wrote a book called Discipline is Freedom. Discipline is freedom means you don't have to think, right? You don't have to think about it because you just know what to do. So number 1 thing is having a plan. Number 2 thing is following the plan. Now, as funny as that is to say, oh, I can follow the plan. Have you actually been in a quote battle-tested situation? I'll give you one right here. Have you been in a battle-tested situation like this big ugly red candle that happened last Friday? Have you been in a situation like that? The panic sold? Just took your plan and threw it out the window? Have you been in a situation like that where you were cool, calm, and collected and you said, okay, I have to plan on my plan not going to plan by knowing where I'm going to get out? So that is by far the second most thing. You've got to have a plan that has back-tested data to go along with it, right? Having a plan that's just like, oh, it feels good. Oh, it should go up, right? Oh, it's got to be $100 a share. That's going to get you in trouble. When you can show empirically with data that this plan mathematically has worked over time, that is what you need. And then number 2, have the trading psychology to say, I'm going to follow that plan. I'm going to follow that plan and I'm not going to touch anything. Once I'm in the stock, I'm not going to freak out. I'm not going to go brag to my friends how much I'm making, right? Because anything can happen. I don't like to count my chickens before they're hatched, right? Because I want to see at the end of the day, when I get out of the trade, what the actual profit and loss was, right? So third most important thing, having a plan, having the trading psychology to follow the plan. What would the third most important thing be? You tell me. What would you guys say is the third most important part of the plan B? Let's see. I'm looking through the chat to see what you guys would say. Managing risk, having no expectations. I like that. Let's go with that one. Having no expectations. Honestly, I really like that as the third most important thing. Having no expectations means that we don't know when we're going to get paid, right? There was a question that came through last week, and I thought it was a really good question because the question was, well, what if we have to sit in cash and not F up, right? What if we have to sit in cash and don't F up our portfolio all of 2026? That's what it's going to be. I don't have any expectations, right? When you set an expectation, that allows you to now be emotionally biased into the outcome. So what do I mean by that? If you have a stock that, setting no expectations here, we don't know when the distributions of wins and losses will happen in our account, right? Any one trade could be a win or a loss. Even if it's the greatest setup you've ever seen in your entire life, it can still end up with a loss, okay? So we don't know the distribution of those, right? We could have a span of wins and a span of losses, or they could go back and forth, right? You might have 1 win and 3 losses, or 3 losses and 1 win. We can't put our personal biases into the market to say, this is when I want to get paid. That's why I think a lot of people who start in day trading or Forex trading get really hosed over because they have the expectation of, oh, I'm going to make $10,000 by the end of the month. It's going to be great. But then they don't have any trade set up. So they're like, well, I need to make $10,000 or I can't pay my bills. So I'm going to start making some trades I wouldn't make otherwise, right? Because they had the expectation of, I need to get paid by the end of the month. There have been months where I haven't traded anything. Months I haven't traded anything. And yet I'm still up 40%, give or take. I don't remember what the actual is right now. 40%-ish for the year. I'm up 40%-ish for the year right now. And yet there are months where I didn't do anything. Imagine if during those months I said, I have to get paid. I must get paid. I have an expectation that I need to pay my bills this month. Then I'm going to make poor choices. Then I might not have those gains that I wanted. And plus, like, this is great for you guys to see what a professional trading lifestyle is like, right? It's not Lambos. It's not going to the club, right? It's boring AF 95% of the time. The other 5% of the time is actually pretty fun, right? Being able to enact a plan, see the money coming to your account. It's amazing. But the other 95% of the time, honestly, it's boring, boring, boring. Nothing to do. And I don't think a lot of you have been prepared for what it takes to be a pro trader, because every time there's a red day, right, our Discord lights up. Every time it's a red day, our Discord lights up, and it's like, oh no, how could this have happened? Chris, how could you put us? Oh man, there was somebody who in the Discord last week, I got a little bit frank with, because he's like, I just lost $25,000 in profits on this trade. And it's like, and well, you should have had, blaming me, of course. You should have a completely better system that doesn't allow for that to happen. Okay. By all means, let me know when you have created that trading plan that basically has a pressure sensor underneath Donald Trump's toilet, and anytime he sits down on the golden throne, that it then sends out a mass distribution to say, hey, he's sitting on the toilet, get out of every trade possible. It's not going to happen. Okay. You will have wins, you will have losses. You get to determine when you're in and when you're out. Okay. Nobody's going to make you, so you're still for shares, right? Psychology, have a plan, and position sizing. I like that too. Having patience. Hitting the like button. Absolutely. All right, let's go to the next question. Bill says, is there a way to sort all the buy signals that have Outlier 9? So right now, in our screener, we have lots of different ways to sort and do all that stuff. But we don't have an Outlier 9 filter just yet. But the great news is, Phil, we are actively always hearing from our customers. And this is something that you guys have been asking for. And so Mahesh and I met last week to talk about screener upgrades. Outlier 9, a button for Outlier 9 is coming. A button for Plan M is coming. A button for Plan A is coming. So the only things that pull through are what you want to see. There's not going to be any sort of filtering, right? We're trying to make this far too easy for you, right? You can click any stock at this point, like this one here, and go look up in the corner and show you if all Outlier 9 is set up, right? When you know the market's ready, the sector's ready, and the stock is ready. But we don't have that built into the screener just yet. We do have a massive upgrade coming in the next couple of weeks where we're adding 6,000 new stocks and ETFs into the platform. And it might even include the screener update. I don't know exactly. Mahesh doesn't give me all of his plans. But that is coming very, very soon. Question for Mikey Mike, the market maker. Can you tell me what my plan is? Your plan is to never follow what Chris says. And the reason why is because I'll always tell you that a stock is in a bearish trend and it's going to go up. I always tell you that a stock is in a bullish trend and it goes down. And I can never win, right? I'll never be right here on YouTube. So I don't want you to ever put yourself in a situation where you're going, Chris made me tell my DeFi shares. Yeah, Chris made me tell my DeFi shares. Yeah. It's such a meme now because this person came on and was like, Chris made me sell my DeFi shares. And it's like, did I really? Tell me when I got into your tell me when I hacked into your computer mainframe, right? I know I'm Batman, but I don't give two monkey donkeys about your account. But imagine that I hacked into your computer mainframe and I was like, yes. Joe, I'm going to go make you sell your DeFi shares. No, I don't give two monkey donkeys what you do. I'm just trying to give you the best trading education you can find for the least amount of cost. How's that sound? Right? There are people who pay $10,000 a quarter for what I give away on a daily basis. Right? I have no ulterior motives here other than getting you to sign up for Outlier. It's 82 cents a day. Right? It's 82 cents a day to get the world's best AI stock trading assistant right at your fingertips. Right? And in fact, do me a favor in the chat. Let's show some social proof. Right? Let's show some social proof. You guys tell me if you've made back your 82 cents a day. Right? Because honestly, at this point, if you don't have Outlier, you are losing money. Hands down, you're losing money. Price Center, great question. What went wrong when you sold Iron Condors? So I got suckered into the very sexy notion that selling options was the easiest trade to make. And selling Iron Condors was the easiest trade to make because a stock can go up, it can go down, or it can go nowhere and you still profit. Now, let's talk about what an Iron Condor looks like just to make this easier. While I do that, Dennis says he's made way more than 82 cents a day. Paul Denizen of the Deep says, absolutely, yes. Hang on. Iron Condor. Mr. B says, make my 82 cents a day day. That's what I'm saying. Driz says, oh, only just a few times. Yes, we can definitely monitor Trump's tweets for you, but I'd rather have that pressure sensor on his toilet. I think that'd be a little bit easier. GUI says, I've learned a ton just listening to you daily. Plumber Fred says, yeah. Ozian says, I have made decades of Outlier from his wins. Yeah. It's Jamie says a gazillion times over. David says he made it back in the first week. Yeah. We have infinity numbers of people who have made so much money by getting into Outlier, right? Honestly, it is a very, very, very awesome place to be, is to be around winners like you guys. So let's take a look at this. Yeah, what we're selling here is discipline, and it's the hardest part of trading. Yeah, and that's why we talk about it all the time. Let's open this in a new window. That's not what I wanted. I actually wanted it in a new tab, but that's fine. I wanted this open image in new tab. There. Boom. Now I'm going to draw all over this. Y'all ready? 9-year-old Chris gets out his markers. Let's do this. All right. So current price of the stock is $100. All right. Everybody can see $100 is our midpoint. The stock, it looks like we sold a 105 call and we sold a 95 put. Okay. So sold, put, and then we sold a call. Can anybody in the chat tell me, just right off the bat, why this seems like a bad idea? And then it looks like we bought the 110 call. I'm just going to put buy call. Then we bought the 90 put, buy put. Now, listen, I get the sexiness of this, right? We're starting at $100. And let's say that over time the price goes, oh, you know what? I don't want to be $100. Price wants to go up to 105. Oh, okay. No big deal, right? Oh, I don't want to be 105. I want to be 100. Oh, sure, fine. Oh, I don't want to be 100. I want to be 95. Oh, even better, right? No big deal. I don't want to be 95. I want to be 100, right? This only works if the efficient market theory was a reality. But unfortunately, the efficient market theory is a load of hot monkey donkey garbage. Why would I ever say that the efficient market theory is a load of hot monkey garbage? Okay, let's go to GLD. This breaks the efficient market theory, right? The efficient market theory would tell you that this is a 3 standard deviation event. A 3 standard deviation event happens once every 10,000 years. Huh. Well, that's weird. Yeah. Wait, hang on a minute. Didn't gold also have this huge run up back here and earlier this year? Wait a minute. Hang on. You're telling me that in the course of 1 calendar year, we had 2 3 standard deviation events? So in 1 calendar year, we had 2 events that happen once every 10,000 years. Well, that doesn't sound like it works very well, does it? Now, granted, this sideways move right here would have worked amazing. Would have worked amazing for this iron condor. It'd just go back and forth, no big deal. But when something like this happens, the efficient market theory doesn't work. So if you're trading a trade that boxes in your profits and you find a stock that moves, is in a trend, then you got problems here. You got huge problems here because it's going to break out one way or the other. It's going to break out. And that happened to me over and over and over. And so the quote experts would tell you, oh, no big deal, right? If it breaks out to this side, you just roll up your puts and then sell. I'm going to do this in blue. You just sell the put spread here, right? You just roll from the 95-90 put spread to the 105-100 put spread. You take in more credit. Yeah, you take in more credit. It's great. And then if it happens to come back to here, it's like an iron butterfly and you make even more money. But we have some problems here, right? We have some real problems here. Let's say that you had put on a iron condor at 320 and 300. Now, I speak from experience on this, okay? I speak from experience on this. There was a point in time where this trade would have worked out, okay? But part of the problem with selling options is you have to have time ticking by. You have to have time ticking by, right? And so for this trade, right, let's say we sold it and let's say we sold it here, and 30 days later, it was here. Awesome. So we got our full profit. And we're like, oh, that was great. Let's do it again. Let's do it again. So we sold it here, 30 days later. Cool. Awesome. We made money. Let's do it again. We sell it again here, 30 days later. 30 days later, this is such a shit show that you're like, what in the world have I done? What in the world have I done? So what do I mean by that? The max profit on this trade, is $200. Honestly, this 200, 300, that's generous. If we're being honest here, this is more like a 100, 400 situation here. 100, 400. I don't believe this 200, 300. I think it's going to be more like 100, 400, and that's being generous. So you had 2 winners in a row. All right, so let's put 2 winners up here. So plus 200 because we got that. And then we have 1 loser, which maxed out at 400, right? It definitely maxed out at 400. So we do negative 400, which means our total P&L across those 3 trades is negative 200. That sucks. That sucks real bad because I just had 2 trades in a row that got thrown out the window. Now I need 2 more trades to work perfectly in order to get back to just break even. That's cool. You know what? Gold can't be running that much higher. I'm going to sell another iron condor here, right? Surely it's not going to go out of this again and then What did it do? It blew it out again. So now you're down another 400. So now we're down negative 600. Okay. And then you're like, okay, it can't do it again. The efficient market theory says there's no possible way. There's no possible way. Right, exactly. You won 2 out of 3, yet you're down twice as much, or you're down as much as you possibly could have made on both of those trades, right? You won 2 out of 3, yet you're getting hosed. Oh, the efficient market theory says it can't keep climbing. This is a 3 standard deviation event. There's no possible way that we're going to have another 3 standard deviation event in the same year. No way. I don't believe that. And then, oh shit, it happened again. Frick. Why does this keep happening? And then you're down another 400. So now you're down a total of $1,000 when all you're trying to do is just sell a couple iron condors to grab your $100. But the efficient market theory can't be just a theory. It has to be reality here. So we're going to sell another iron condor. We're going to do it again. Oh, again. I hope I've made my point about how bad of a trade iron condors are in a trending market. In a trending market, this is the fastest way to blow up your account, because you're losing 4 times more than you could ever make, because it violates, I know some of y'all said this, it violates the golden rule of leverage. You're putting yourself in a situation, I don't believe this $200, $300 baloney. It's going to be more like 100, 400. You're putting yourself in a situation where you can lose more than you can make. And you're doing it over and over and over on a theory that has been proven on the same stock just a few months before, on a completely flawed theory that the market is efficient. The market is efficient until it bitch slaps you in the face, and then it's not very efficient anymore. So we're gonna do one more question, and then we're gonna go immediately into today's trading room. We're gonna give away all kinds of merch. I'm gonna celebrate you guys being big winners, because we have a giant list of winners in our Share Your Big Wins. I can't wait to do that. Outlier is the way. Like Senior Wahoo, he rolled NVTS for 101.5% profit. Rolling in some Outlier voodoo. This is the way. Congratulations to you. That is not normal, by the way. You're not allowed to have those kind of moves. And the efficient market theory would not allow you to have those kind of moves, Senior Wahoo. Anyway, let's do one more question, because Bryce Hunter, thank you so much for letting me spend a couple minutes just reliving all the pain and suffering that I went through. I don't want you guys to do the same. Now there is going to be a subset of you who's going to hear what I'm saying, and you're going to be like, Chris is dumb. And I do have an itty bitty baby brain. Chris is dumb. He's the one guy who couldn't make money selling options. I'm gonna just do it anyway. By all means, you do you. Come up with your own plan. Trade your own plan. That's what I talk about all the time. Come up with your own plan and trade it. But when you get hosed, come back to Outlier, because that's the last thing that we want for you. Go ahead. Antonio, I have a friend I've been telling about Outlier and what I've learned, but he won't listen. I know, right? I know. Trust me. I tell this I've made over 2,400 videos at this point, and there are people who still don't listen. I get it. And he keeps losing money. Is there any way to get through to someone so stubborn, or should I just give up? I'm sad. Antonio, listen, as somebody who has, I've documented my whole journey on YouTube as well. If you really want to see, right, you can watch me go from selling options, thinking I was a genius, losing over and over and over. And all of this is on YouTube. This is the great part about it. You can see my entire trading journey on here, to finding Steve Burns, working with him, working with 5 of the market wizards, and then changing my whole trading plan to be the exact opposite of what I was doing, which was really, really hard, honestly, to go and switch from something that I was convinced to work, but then I saw in my own returns that it didn't, to something that I was convinced didn't work. And I was like, well, it has to work if the opposite that I'm doing is not working, right? Unfortunately, you can only do so much, right? You can only do so much, right? At some point, his pain will be so much that he will start looking for answers. But until that pain is greater than the pleasure that he seeks, then it's never going to happen. Ed Secoda has this great quote that says, everybody gets what they want out of the market. This person may want sympathy. Like deep down psychologically, he may want sympathy. He may want to be the person that goes and complains and things, right? He may really enjoy doing that on a deep level. And we don't know that. What I wanted out of the market was I wanted to be able to play the game effectively. And that's how I treat trading. I treat trading as if it's a video game, right? If you've played Mario, if you've played Lego Star Wars, if you've played Assassin's Creed, put your favorite game in the chat. My favorite game, my all-time #1 favorite game, Hogwarts Legacy, was amazing. Best game I ever played. Second best game I ever played was the new Indiana Jones Circle of Destiny, something like that. Dial of Destiny. Amazing game. No, it's not Dial of Destiny. That was a movie. Great Circle, something, whatever it was. Brand new Indiana Jones game, tremendous. And then the Assassin's Creed, like the old ones before the one in Egypt. I love those games, right? I just my weekend mornings before anybody gets up is I wake up at like 5, 6 in the morning and I just go play Xbox until everybody else is up. I just enjoy myself, my alone time. I treat trading as if it is a video game. I need to know the rules. I need to know what works, and I need to know what doesn't. Right? When you get to the point of treating trading like a game where you know the rules and you know what you can and can't do, then do you think you're going to keep repeating the processes that don't work? No, of course not. But there are people who put themselves in situations where they say, "Oh, I lost. Let me do it again. Oh, I lost. Let me do it again. Oh, I lost. Let me do it again. Oh, I won. Yay!" There's oh man, I don't remember what it's called, but the random distribution of wins and losses has a psychological effect. I wish I could remember off the top of my head what it is. But the random rewards is what drives people to go to the slot machine. I was going to say slot market. The slot machines for that exact thing. They can lose multiple times in a row, but when they hit the one winner, right, it overwhelms them with dopamine to completely forget about all the losers that they've had. So honestly, all you can do, in my opinion, is follow your plan. Show him how great you are doing. At some point, that pain will overwhelm what he is doing, and he will, and he'll finally change his plans, right? But continue to follow your plan, right? Continue to follow your plan. In the meantime, if somebody were looking to save time, make money, and start winning with less risk, I would definitely click one of these 2 videos and have a fantastic day.